Hello Stéphane, welcome in Belgium. The outlook for 2019 is called Beyond the Peaks. What does it refer to?
Thanks, Wim, for having me. With the title Beyond the Peaks, we really wanted to trigger a conversation and a reflection with our clients about three key topics on the macro side that have occurred over the last few years. And the first one is really related to the fact that probably economic activity as expressed as GDP growth has probably seen a peak recently, and we need to prepare for deceleration ahead. To the same token, we can say that probably earnings, corporate profitability around the world have probably peaked as well in terms of growth, and we need to live with less earnings growth in the years to come. And last not least, of course, a very important factor for the equity positive markets we've seen over the recent years is the liquidity provided by the central banks that probably as well has peaked and will now move into a more contraction environment. So the combination of these three peaks somehow have clear consequences about how the portfolios should be constructed, and this is what we wanted to trigger with this somehow provocative message. But beyond the peak is not necessarily the abyss, but we believe there is deceleration.
In 2018 we had several volatility spikes. What should we expect as an investor going forward?
I think the reality is that, as the title of our publication, Beyond the Peaks, alludes to, we are going to an environment where, let's say, the variability of outcomes of the macroeconomic environment is going to increase, So the ability to predict properly the future is going to be even more difficult, let's put it this way. In this context, I think naturally financial markets will reflect that variability of outcomes via volatility in the financial assets. So it is probably to be expected that we will see several of those more volatile periods on the course of the year. And that probably means as well that there is opportunities created to have a bit more tactical activity, trading activity on those periods. And I think that's probably one statement we would make, is that this is an environment that probably is less strategically constructive, but more opportunistic in terms of market sequences. I think it's also, as a second point, a market could support more active management as a consequences. So I think instead of just having passive exposure to markets, we would tend to believe on the ability of active managers to create alpha. I think the last message I would like to share is that more volatile environment does not necessarily mean weaker financial markets down the road. I think history has told us that the later phase of the cycle that we are basically moving towards is still able to remunerate the risk taken by the investors, despite the fact that probably the volatility increases, and hence probably the ratio of risk and reward tends to deteriorate. It is still an environment that could reward the investment properly, and hence we recommend to keep exposed to most of the assets into the portfolios.
Given this economic slowdown and volatile environment, how would you structure the portfolios and what are your strongest convictions?
I think first and foremost I would reiterate some fundamentals of portfolio construction. I think more than at any other phases of the cycle, the importance of having a well-diversified portfolio is of primary importance. So really, from an asset class perspective, from a region perspective, it is important to diversify. The second point I would like to raise is now is probably a moment to increase the average quality of the portfolio exposure. And that could be expressed on the fixed income side via probably some less credit exposure on the lower quality end. It could be also looked into the equity side, maybe with a focus on more quality cash flow generation and probably larger capitalization companies at this point of the cycle. And I think also looking into how you can find diversification in the portfolio, looking into gold, for example, looking into other asset classes that can help to bring this decorrelation at the portfolio level. In terms of conviction, I think at this point of time, it is still too early to give up on risky assets, as I said before. So in this context, we still want to have an exposure to equity markets, which I would qualify as probably neutral to a long-term strategic exposure ambition. We would tend to probably favor a bit the US equity market over the European one. And if I look at the emerging market space, we would tend to like Asia more than Latin America, for example. So we really, want to stay exposed, to these markets, as we believe, even though we're going to face a bit of deceleration, equity risk premia is still decent and should be, remunerating the investors. If I look outside of the equity spectrum, I think, the conviction on commodities is relatively good. We believe oil prices should appreciate in the next 12 months. And as I said just a few minutes ago, we believe gold has a role to play as a diversifier into the portfolios. Looking at a decelerating phase of the economy, you want probably as well to increase assets that generate cash flow for the investor. And this is clear that looking into some real estate investments, infrastructure investments, are ways of getting exposed to this type of cash flows that probably are more resilient in terms of the economic cycle exposure. So those would be the key messages we would like to say, to give. It is, again, a bit too early. It is clearly too early to become too defensive. We see still upside potential for equity markets over the next 12 months.
What is the long-term investment theme that you would put forward for 2019?
The theme we want to put forward for this year is ESG. It is environment, social and governance aspects to be put at the center of selection of your investments. And the reason we are talking about this theme this year is we believe there is on one side a growing awareness and need from a part of the population to invest also according to their philosophical reflections, right? So I think this is an alignment between thoughts and investments. And at the same time, there is a growing need of capital and investments, to fulfill those ambitions. If we look at the United Nations, long-term, let's say, social, development program thoughts that they have, they definitely need a lot of investments also, in order to succeed in that side. So ESG investment is not only about feeling good, it is also strongly believing that companies that put ESG considerations at the heart of their strategy will deliver better operational results and hence should be rewarded by the markets as well. So we're moving forward, right, in that reflection, and it is also very clear that regulation is going to push investors into that direction in the years to come. So those various aspects, I think, are one very strong fundamental about the reflection on ESG. And then another element I would put to the forefront is that ESG investing is no longer, we believe, associated with a performance, let's say, negative element. I think this is really a message we want to give, that today ESG can be bringing more performance to your investments rather than detracting on performance. And I think we have now enough years of data in order to support the case that ESG is basically also be seen as an enhancer going forward of returns. So if you put the need, the awareness, the development that more and more people in the investment world want to align their thoughts and philosophical benefits to this planet as well as their return expectations, ESG is something that everyone should consider seriously for the future.
Thank you very much, Stéphane, for being here in Belgium. Thank you very much for your clear messages for our clients and our investors, and we hope to see you soon again in Belgium. Thank you.
Thanks for having me.